Good morning, everyone. Today is, believe it or not, Friday the 13th. That's right. Another wonderful day where we may see some craziness. Friday the 13th has always typically been known as kind of a day of chaos, but we'll see what happens today. Obviously, the news of the attack related to Israel attacking Iran because of as I understand it, a preemptive kind of a strike related to Iran's threat to target U.S. and Israeli installations throughout the Middle East was carried out yesterday. The markets really reacted. Currently, the markets don't seem to be, reacting too heavily to it. Yeah, the markets are down about 0.8%, a little bit more. They were down quite a bit heavier. If I come over here to the ES or the NASDAQ, you'll see that overnight, if I come down here to a 30-minute, you'll see that we had quite a bit of selling pressure overnight with the attack. This is the regular session. This is the overnight session. You can see that we are recovering quite nicely considering these lows way down here. You can see the NASDAQ, same. If I can type. Same thing, big selling pressure overnight. NASDAQ is down 1.12, down 245 points. Now, what's going to happen today? How is this going to react to a market open? Kind of unknown, okay, with regards to the data. Um, Iran could retaliate today or tomorrow. We have a pretty big opportunity for unknowns this weekend. I think what we're looking at, folks, here is, we've got a Father's Day weekend. We've got a lot of uncertainty, and the markets are, as you're well aware, if we look at this and we take a look at this NQ, which is showing today's activity, we have a fairly solid breakdown. We have yet to get below this recent standout low, which could happen. And then we have this secondary standout low right here, which would be a secondary breakout level, and a third standout low right here, which would be a fourth breakout level. Or third. So the whole idea here is, as I mentioned to you earlier, we really kind of have this gap from back over in this area taking place. And that would be, in my opinion, the final breakdown. That would be really, this purple, that would be really the big breakdown level where we could see much deeper lows. But at this point, we've come right down to this low stalled. We're going to hold up. I think that, me personally, I kind of think that this level would be a sufficient breakdown in the market. I think that establishes a deep enough correction from these highs, about a 3.5%, 4% correction, to potentially mark deeper downward trending. So, my opinion is once we get to this level, then I think we could continue quite a bit deeper. So, that would be kind of the same thing back over here under the SPY. You can see I've highlighted that same kind of a low. And what we're looking at right now is this 590.58. We're currently at, or 590.75. We're currently at 598.28, down 0.91. Really, folks, we need to get below this 590.75 level right there to get some sort of a breakdown. So highlight this in bright red, make this kind of a reddish color, and understand that this is our level right there. That's the level we need to kind of get through in order to see some kind of real breakdown in the market. If we're not getting up below this 590.75 level, then I doubt we're going to see any big breakdown move. We could see a pullback move, but again, we're at 598. We've got another basically 8 points, 7.5 points to get down to this level before we consider a major breakdown. And again, I think this area here really sets up our breakdown level. I think once we get below this level, we then have a chance down here at 576, 577. And of course, once we get to there, then that's really 579, 580. And then once we get to there, I think we have a very good chance of breaking down below this 575, 576 if it happens. Like I said, if it happens. Right now, we're not even near that. So, given where we're at today, and given that we have the Harami pattern, our pattern for today being a Harami-Inside pattern in bullish explosive trending, looking at a crush pattern and a reversal rally, then an up, down, up in counter trend, which would be a down, up, down. That would indicate that we would have again, a down, up. Here's our up pattern down. So we would see downward potential trending today in a counter trend mode. If we were to get a down bar here, hypothetically like this, don't know what color I've got, but if we were to get a down bar followed by potentially an up bar here, that would be on Monday, could see some sideways rotation in this area, just hypothetically. Could see some sideways kind of, sloping downward type of trending, possibly setting up in this area as the markets roll off of this potential weakness. We will see. Going into next week, we have the top resistance on Tuesday, gap potential on Wednesday, gap reversal, and then a pause bar. Then we get a time shift, which happens on the weekend, so it's non-existent. We get a crush pattern on the 23rd, a flat down, a breakdown, then rally and counter trend, then a rally and trend mode. So could be a very interesting kind of rolling topping pattern here. We'll see how it plays out, and we'll see what the news is over the weekend. Personally, I expect the markets to kind of do this. So if I come over here to hourly and explain to you what I see is going to happen, we're going to open up down in this area, possibly 597, 598, depending on what happens in the market. I kind of expect the markets to, really weaken in the morning and then struggle into some support. And then on the following day, I expect it to potentially, this would be Monday or Monday actually. I expect it to potentially open lower and try to find some support to the upside. So really, I think we're consolidating downward in a slight sideways panel today, maybe with lows down here, 495, 496. And then on Monday, I think that we might open a bit lower off the weekend and roll into an upward trend potentially on Monday, trying to resume that upward trending. So that's going to be my guess as to what happens here. We could get a retest of lows. We've been lower, but I think really this 595, 596, 594 area would be our lows today. That's my opinion. Okay, so come back over here to the we'll leave all of that. Let's come over here to the QQQ. Same type of setup. We're looking at that rolling type of a pattern. QQQ is already down 1.17, down 6.26, 527, down in this area. Remember, we have that standout low here. We have that standout low right here. And we have that deeper standout low down here. Each of these represent a threshold that could be broken to the downside. We have a standout low as well right here, which has been broken already. Okay, so that one has already been broken. That's a pretty good downside indicator, meaning that we're going to come try to take out this level. And this 522 level, I think this could get hit in early trading today. I think really, if you come down and take a look at this chart on the QQQ, this literally this 519 level starts acting as pretty solid support right over in this area. And if we were, this is daily, if we were to see some sort of chaos continue after the Israeli Iran conflict, moving down to this 519, 512 area would not be uncommon. This would be a fairly common pullback. You see, we get these types of pullbacks fairly regularly. This is normal price rotation, but we are, as you're well aware now, we are outside of that standard deviation channel, and that means that we are moving potentially into a breakdown event. We'll see what happens here. We could be rolling into a secondary excess phase peak pattern like this as well. So we'll see how it plays out over the next couple of days here, guys. Okay, gold and silver were up quite a bit last night. Gold rallied up to almost 3,500, stalled back out, and this is because the probably the surgical strike in Iran, as much as it was unexpected yesterday, it was probably over almost as quickly as it started. And you can see silver has yet to make a move. Now let's come over here, take a look at platinum. Stalled out yesterday up here near 1,300. Stalled out up here near 1,300. Down a bit. We've seen this big, expansive rally here. And I'll be honest with you, I think gold and silver could really rally. I think we could look at, going into the weekend, I think we could look at some positioning into metals as a hedge. Silver's already up near 36.50, 36.30. Gold, as you can see here, is moving back up slightly. I think we could see a fairly strong rally here in metals, with gold pushing up above 3,500 and silver pushing up above 37. So we shall see. The gold and silver pattern is a breakaway pattern today and carryover trending with bullish explosive trending. We will see how this plays out. Obviously, I've been bullish on metals. Didn't expect it to be moving like this because of a conflict in the Middle East, but the Middle East is always kind of chaotic, especially when let's just say different countries position themselves for an expanding conflict. Kind of hard to avoid conflict when every couple of weeks someone is turning around saying, I'm going to bomb you, or I'm going to bomb you, or I'm going to bomb you. At that point, it's just kind of escalating a conflict. There's no avoiding it if everybody's standing around saying, well, I'm going to bomb you. Well, okay, somebody's going to get bombed, right? That's the way it is. So anyway, we'll see how it plays out. And like I said, looking for gold here to make a move up above 34.70, 34.80 today, I think. I think we're going to have a pretty good rally here once the market opens, regular session. I think you're going to see a lot of people buying into gold, trying to protect against this weekend. And then lastly, we're going to come over here to Bitcoin, and Bitcoin was, as of last I checked, quite a bit lower. Yeah, see, overnight we had seen this big breakdown, and now we're finding some support. Let's come over here, take a look at the hourly chart. Hourly chart is, kind of following the NQ. As I mentioned to you, it's very interesting to see how, Bitcoin is not necessarily a quote unquote safe haven or alternate currency or hedge. This chart here, this is hourly, looks quite a bit different than this chart here, which is hourly gold, which is a hedge. So there's a big difference between this and this. What's the difference? Well, it pretty much looks like this. Or Okay, this is the NASDAQ. And what happens is the Bitcoin is, in my opinion, more of a blockchain technological asset or technology asset. It's turned more into a technology sector stock than it is a hedge or an alternate type of currency. So, where we're at again, very deep selling off of these lows. My opinion is that Bitcoin is going to continue to weaken because of this rolling trend and this uncertainty into the weekend. You may find this is 3 hours, should have been 4 hour. You may find here that, again, we're coming off of this low. You can see how we've got this excess phase peak pattern. We are breaking down here. Let me draw it for you. So here's our rally. Oop. Here's our rally up, coming down to our low, coming across the flag, secondary flag potentially around here. And now we are breaking down. What would happen in this instance, folks, is that we would break down out of this area and we would attempt to move into consolidation. So at this point, if this continues to play out, we would break down, maybe stall around this low a bit, and then break down into consolidation. So we do have that breakdown mode. As of right now, we do have this breakdown in trend right here. Okay. It is happening. It is confirmed. We've come back down to this support level, which I've highlighted, this 103,500 level. That's pretty much where we got to right down here, these lows. We're consolidating around this level. If we get again, break below this level here, this 103,500 and 100,450, this is going to be our last line of defense right around this flag low right here. If we break down below that, then we're moving into consolidation, which is going to set up back over here. Which is going to be our rolling consolidation level. So again, I think it could happen this week or this weekend with this big news, this big breakdown. We're going to see how the markets react, but I mean, it's really, really looking quite volatile today. It might be, kind of a sideways move here, but really looking quite volatile overall. I mean, I don't know about you, but I look at this and I think I want to make sure that I'm hedging and protecting my assets, especially up near these highs. Given the uncertainty of this weekend, I would think the smart move would be to pull 50, 60, 70% off, move back into cash, hedge my positions a bit, and wait to see what happens going into next week. Okay, guys, that's it for now. I'll talk to you later. Go get some today.